Hi everyone, welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Naresh Vigh, co-founder of Kudos, a fast-growing, tech-enabled, agile NBFC focused on underserved MSME segment in India. Naresh is a graduate of FMS Delhi and has worked for companies such as HSBC, Citigroup, Aviva, and Bajaj Finance before starting his own venture in 2018. Hi, Naresh, welcome to ELI.
Yeah, hi. Thanks, Priya. It's a pleasure to be here. I really must compliment and congratulate you on this great initiative that you are doing for fostering the entrepreneurial ecosystem in India, which is a much needed, initiative for a country like ours. Thank you so much.
I would request you to introduce yourself to our audience, please.
Yeah, sure. So I'm Naresh Vigh. I've been a Delhiite. I was born and brought up in Delhi in a middle class family. My parents, I come from a banking family on my dad's side, and on my mother's side, they were all businessmen. So there is a confluence of salaried executives and businessmen. Uh, Grew up in Delhi, studied there, was doing reasonably well in school. So at that time, in our time, it used to be either engineering or medicine kind of careers, traditional one. So sat in for engineering exams, cleared and did an engineering. Uh, my children, how they've grown up, my children keep telling me still that I wasted a seat in the engineering college because after that I, worked for 2 years while with Maruti, but then went in for an MBA. So then after MBA, I went into banking career. So my engineering was from Delhi College of Engineering, and then MBA again from Delhi in Faculty of Management Studies. So since then, I've been into a banking career, banking and financial services career. Started with HSBC in 2009, worked there for a year, and then moved to Citibank. In our time, Citibank and all used to be dream jobs, campuses, long time back. But so moved there and worked in consumer banking, retail banking, worked on NRI mortgages, set up NRI mortgages, within Citibank across 4 or 5 continents. A bunch of lot of exciting stuff at Citibank at those times. And then after retail banking, I moved to Aviva Life Insurance because 5 of my seniors moved in over there as CEO or agency head. So I moved in over there. I had a good time on the liability side. Before that, I was in asset side of banking, which is lending, and then went to the liability side. Did insurance sales for 5 years with Aviva, and then got an opportunity to come and work in Pune with Bajaj Finance. Mm-hmm. Bajaj Finance, I think a lot of people know, has been a great success story in the market. Sure. A great franchise, which so I joined as a business head in loan against property business. Ran that for a while. It was a large book of 1.5 billion. And then, worked on setting up professional loan business, which is loans to architects, doctors, and CAs. So we created a good balance sheet over there and a highly profitable business model over there. And then, I moved into my entrepreneurial journey, which we'll talk about more as we move forward.
Sure. So first, let's start with telling us what is Kudos Finance? What does it do? What kind of customers we have? What impacts we have been bringing to them?
Yeah, Kudos is a infrastructure layer NBFC. We are an NBFC, licensed NBFC from RBI. We provide infrastructure, digital infrastructure to all fintechs, which are trying to provide lending products to their customers. For instance, let me take an example, Priya. If you have an idea that you want to start a lending product for financing to patients, Corona and pandemic is in top of everyone's mind, unfortunately. But there is, if you think that you have a solution that you want to offer to patients for immediate financing of their healthcare needs, so that they can get admitted without any problem, they can get treatment that they like, and they should not be running around waiting for an approval. Typically, our banking system has been such that a loan approval can take anything between 3 to 7 days. You would require ITRs, you would require salary slips, and all that. But there are a lot of fintechs who are innovating. Let's say you have an idea that, okay, I want to provide instant loan and I would have a simple criteria which I want to enable digitally. So you would come to Kudos, and say that, okay, this is a solution that I have. Uh, but I have been looking around in the market that I need now a bureau to be pulled, for doing credit analysis of the customer, and I want, capital to be provided. I have to get, for a digital process, I will need e-sign, I will need tie up with eNACH for collecting EMI later, and there is also a LOS and LMS that is required. For that, a fintech, or if you have that idea, you will have to go to 10 different service providers to integrate all of them under one roof before you can think of launching it, which will take you 6 to 9 months. And that time is critical for any entrepreneur when he's trying to launch a new solution for anyone else. So there are various people who also could be working on similar, something else can come up in the market. And some people can lose their, steam or money that they have if they can't even launch in 7 months. So we immediately crash that time, and we enable fintechs to launch their products within a matter of a week. Entire end-to-end digital lending for their customers in a highly customizable format is what we provide to fintechs, and also to B2C digital players who may not be fintechs, who could be large e-commerce players who are also trying to give lending products to their customers.
Mm-hmm.
So we have created a full stack digital lending infrastructure with a LOS, with a LMS, where all these services are already built into it. For the last 2.5 years, that's what we've created. And any fintech who comes to us can submit its product program. And normally when they will go to another large or traditional old player or a bank or whatever, they would be told that, okay, no, we need a, straightforward 2-year ITR or a 6-month salary slip and a 6-month bank statement, only then we will do. But with us, you can have a range of options in terms of whether you want to work on transaction data that a customer has for 9 months, 12 months, based on what business he's running, on an e-commerce or any kind of business, or he's a gig economy, Uber, Swiggy driver who gets his salary for last 3 to 6 months, and he wants a credit line product, not a term loan EMI product.
Mm-hmm.
He wants to pay not every month, he wants to pay only on interest for 3 months and then on EMI. So various kind of repayment options, various kind of eligibility and underwriting options is something that we are able to provide and customize for a fintech, because of which they love to come to us and work with that kind of flexibility to be able to go and launch their products in the market on a immediate basis, rather than waiting and knocking so many doors over 6-7 months.
Okay. Can you tell us what is API based lending?
Yeah. So, there are a traditional finance method where you would have papers and you will have physical file. A DSA will take to a bank and say, his file please review, go through all bank statement and financials, and then pull his bureau in 3 days and then tell us whether it can be done or not. But that is a thing of past. We provide APIs for every aspect of lending now that a customer does not, or a fintech who's acquiring the customer does not have to submit a single sheet of paper. We have done 30 lakh loans in the last 2 years, and I have not a single sheet of paper or any file for those customers in our office.
Mm-hmm.
Okay, our office is anyway 3,000 square feet. We can't hold so many papers in any case. So there is no single sheet of paper for 30 lakh customers that we have done. Now to do that, you require a lot of APIs. So that is what is API-based lending. That for every part of underwriting and customer onboarding, there is an API. There are 35 set of APIs that we have. One API, let's say, is pulling his customer's basic name and address and demographic details, and then validating it through eKYC. Second API is taking his name, PAN number, and pulling a bureau through an API and assessing him whether he has good track record of repayment. Third API is doing a bank statement analysis. Fourth API is enabling a e-sign for his loan agreement without sending him a 30-page physical document, which he will have to sign at 35 times. And once the agreement will come back, the guy will say 3 signatures are missing, and then someone will go again, knock him at his door and say, please sign 3 more times at 11 p.m. in the night to do the loan on same day. So all that is behind us. These APIs enable us to do the loan in a matter of 5 minutes. So that is where all APIs are. So this is API-based lending, no paper, all digital, customer sitting at home on his mobile, we sitting at our office, our fintech partner in his office, and money gets disbursed into his account.
Mm-hmm. Okay. I think you have built a very interesting solution, and I think the industry is also adopting to similar solution in a very faster rate. Now, I would like to ask you a question that is related to the future of banking industry in India and the stakeholders in it. So the way I see it, lot of automation is coming in, and the people who are required to physically be present and put their manual efforts are not required exponentially. This is happening day by day. So what did you say about the future of banking stakeholders, like the employees the big banks have in the coming days? What is going to happen on that aspect?
Yeah. So I'll answer in two parts the way I see it. The traditional brick and mortar model and the physical distribution model is becoming a thing of past gradually. In the sense that, when I also started working with a forward-looking player like a Citibank 20 years back, there were and there are DSAs who would pick up files, assemble them, take it to an office and get it processed, and there are branches who will process it. But now, given that things are becoming digital and customers want that as a preferred medium of operation, and it is much more seamless, so physical and branch distribution is becoming less and less relevant gradually. Of course, this is happening over a period of time only, period of few years, but it's becoming less and less relevant. People will be able to apply from their smartphones or from the convenience of their house and apply to various players. They are already doing it to a great extent, and then also get fulfillment done digitally rather than going through their CAs or going through DSA networks. The second part that you asked, so branches and ATMs already going down. Branches are also less required. There are people who have no branch, but they have acquired 3 million, 6 million customers and more. So that, of course, is transition happening. Now you ask me what can people like who are working in physical infrastructure or people like us, what everyone can do. So it's about adopting technology in every aspect of your life, which is very, very important. There was a time when technology used to be a department in a company. Today, technology is the company. Technology is not a department in the company. So every employee who is working in a physical model, of course, can readapt themselves to the tech-based solutions, understanding how APIs work. That doesn't mean that one has to learn coding or Python or Node.js, but you need to understand how a customer journey is to be designed, how you can get it, created with your tech team, and whether you can be on the product side, whether you can be on the business analyst side, whether you can be on the business development side in terms of signing up new partnerships, signing up new channels. So there is, of course, selling, all the sales skills and the operation skills will be required, of course, in future as well. But with a technology mindset of streamlining things, of improving products, and understanding how technology works or how codes are written is very important now for everyone. I think so. A basic level of understanding of what is the HTML or what does various platforms stand for and what they can at least enable. You don't need to do it yourself, but at least you should understand what it enables. And that's what the transformation we've also been going through in terms of understanding a little bit of the tech language so that we can understand what customer requires and then translate it to the tech team and they can build it accordingly. So understanding tech is becoming an essential thing. It is not a department. You are part of a technology team. I think everyone gradually will be becoming part of a technology team. And technology will be the centerpiece for every company.
Okay. Now, coming to the interesting part, tell us, how did you come up with this idea in the first place?
Okay, so I will go back a little bit more. That first, I was in a corporate career. I'll come to the company and Pavitra, my co-founder, with that. So I, in my job, I used to, of course, continue to run some businesses, do business development, and chase my own career milestones or promotions and so on. But in between, I was thinking of entrepreneurship sometime with colleagues, some senior colleagues, and even way back like 8 years back. But then in 2017, I met Pavitra, who's the founder of this company and now my co-founder. We met in an elevator. We were in the lift. We happened to be neighbors in the same society also. So he started talking to me, and I saw that he's running this business. So I saw his passion and his enthusiasm and his enterprising nature in terms of running an NBFC alone and trying to scale up a business. So I, like the model, I first became a kind of a advisor initially. We should meet sometimes on a weekend and just discuss ideas. And then gradually we started liking each other, and he proposed also that, okay, why don't we join hands and all. So, I had this thing in my mind that I want to try my hand at entrepreneurship, that whether how one would be able to, see himself without a structured environment of a corporate where multiple departments are doing various things, and wanted to create a impact of my own in some ways. So, like the idea, and we joined hands, and we started running this NBFC. But when I came on board, we were a regular traditional NBFC running a MSME model where we were, acquiring customers directly and doing a business loan in a physical format.
Mhm.
But, we met a couple of partners. So Pavitra got approached by Pavitra is my, as I said, he's a co-founder, and we together run this in Kudos now. So he met a couple of his friends acquaintances who were, one of them was running a company called Bonfleet, and they wanted to use our services for lending to Uber drivers as a prepaid card. So we saw that, we said, okay, while we are doing D2C, we will take this on board. Then some other fintech approached us that, okay, we also need certain solutions. Can we digitally acquire customers? So we built a solution for them. So gradually we saw that there is so much of demand coming on this side, and we were running B2C and B2B2C. It's now what we run together. But then we had to, take an important critical decision that whether we want to run both or we have to pivot on one side. So we were clearly seeing that traditional business is kind of becoming outdated and low in terms of margins. So we saw this as an opportunity that, okay, there are a lot of fintechs who are trying to solve various problems, front-ending with customers, and they are building their distribution. And why don't we become their solid, back-end supporter and service provider who can enable them to take their journey to 3x, 5x, or 10x in the format that they want with the customization that they would want. So, we saw that niche and we identified it in 2018. We decided that we will stop our D2C business in 2019, and we fully moved to an infrastructure layer, happy to be at the backside, supporting various fintechs in their journey in accelerating their customer acquisition and ensuring that they succeed in the market. And with their success, we knew we will have our success. So that's how in the last 2 years, we've grown from 2 fintechs who are our partners to 35 now. And we have around 15 now, in pipeline of getting integrated. We end up integrating 5, 6 every month. So, and, we've been scaling our business volume. We've done around 2,100 crore of business in this 2 years with this fintech model. Before that, in 4 years, we did 110 crore of business in physical model. And in 2 years, we've done 2,100 crore in our B2B2C model. So that you can see how technology and how a strong infrastructure can, change the scale of your operations in a big way.
So you started with the NBFC model and then you have pivoted to a technology company. What is the vision?
Yeah.
Where do you see yourself going in next 5 to 10 years?
So we want to be the digital lender of choice for fintech partners across the country. We want to be a Shopify for fintechs. What a Shopify enables customers that they can come in and create their products, and they can then launch their products in the market, and customers can continue to acquire customers at a rapid pace with no technology constraints, no physical constraints. We want to be the digital lender of the choice with cutting edge digital solutions for fintechs across the country. So we have around 35 partners now. Maybe we scale up to around 400 fintech partners, which will, and through them we can enable, $1 billion, multiple $1 billion of lending in 5 years time. And of course, it's a big goal, but I think last 2 years have given us a lot of confidence. Our own capability, has been tested multiple times with Corona pandemic being there, which is there for which jolted every aspect of business and industry in the country. But thankfully, luckily for us, given that we had transitioned ourselves 2 years back into a digital player, we were already prepared for a post-pandemic or a pandemic world, because we didn't, in the last 2 months also, we hadn't stopped our lending. We've been growing. We were at 28 crore in March, and we were 34 crore in April, and we'll do 40 crore this month, even though there is lockdown everywhere. And even last year, we ended the last year with a nil loss for a full year at 1,200 crore of loans. But we didn't have to take any loss, and we ended with a profit number for the year, given that we were a completely digital player. So, we want to be the digital player lender infrastructure lender of choice for fintechs in the country.
You made a very interesting point. You said you want to become a Shopify for the banks or whoever wants to get into
For
finance.
fintech players who want to lend to their customers,
Okay, so
to enable digital lending to their customers. Yeah.
trying to make an analogy here, Shopify, if you look closely, the people or the companies who use Shopify, they're the beginners or beginning level players. The scale doesn't matter in that case. Whoever wants to use Shopify can build their business out of it. So this is another way of saying that the finance industry is becoming so easy to access or so easy to enter for any players for that matter. In future we'll be seeing very micro and many players entering to the banking and finance sector and becoming successful. What did you say on that?
Yeah, sure. As entrepreneurial ecosystem is growing in the country, more and more fintechs will come. We welcome that, and we are here to support that. Because bigger banks and large NBFCs have multiple priorities, and they may or may not have time or want to have agility for smaller players. But we have been welcoming them with open arms. We've been working with fintechs at seed stage also, people who have just raised, either bootstrapped or have raised very small rounds. And we work from a seed stage up to a Series H funded unicorns as well. They also, so H or a unicorn stage companies also are lending with us, and seed stage companies are also lending with us. Because they like the customization and the agility we are able to provide them. We lend them a proper year in terms of understanding their requirements. Our business analyst team and BD team works with them in terms of translating into a real-time digital customer journey on the platform or on LOS and LMS, and then we enable them to start their business, as I said, in a week or 15 days time. So irrespective of their size and scale, people have been coming and working with us, and we welcome them, and that's how we want to continue to support journeys of various fintechs.
What did you say is the future of traditional banking players like the big banks, HDFC, ICICI, and the Axis banks of the world?
I think they are already behemoths, and they have a large market access, very large presence. India is such a large country. The credit gap is in trillions. Every segment that we look at, whether it's education, whether it is agri-tech, whether it is healthcare, it is 200, 500, 800 billion market. So these players are extremely well established. They are already transforming themselves in terms of their technology footprint. Of course, they will move at a large scale. They will move gradually, and there is a whole market in rural India which is still under-tapped, unserved, where these people already have a good foothold as well for their future growth. So I think they continue to grow and do well. People who adapt technology fast will continue to have better ROEs. People who may take time could have disadvantage over there. But for us, we see that there is a large and a wide open gap for enabling lending in a digital format. Because unfortunately or fortunately, a lot of players still work on a physical agreement. Even today, if you go to any player, even foreign banks and Indian banks, I had to take a loan from a foreign bank last year, no home loan. I signed a physical agreement, even in last year. And 80% of loans, I think even today are in physical agreement, 80% or more, in a lot of segments. So given that those people are going to take time, it opens for us a very large space of providing completely digital lending. And we continue to improve our capabilities. Our tech stack continues to get reinvented every quarter. There are new things coming in. Token model. There is, this thing in terms of various stages of e-KYC evolution, various, GST coming in. That provides a lot more opportunities for digital underwriting. So each of these things is helping us move forward. So we see a large gap to be served on the digital side. We see a big market for us. The traditional players will, of course, continue to grow given the size of the market. And I think some of them are continuing to be our lenders, and we hope to coexist and grow with these larger players.
What are the different challenges you have faced so far while building and growing this venture?
Okay, so the pace at which the technology requirement of customers is moving, given that customers is also well connected now globally across various sectors. Uh, and and the fact that the business cycles, the business environment continues to be fluid, whether it is Corona or whether it is sometimes recession and some other, ups and downs in market in various segments, like gig economy segment went through challenges time because of job losses and all. So there are two kind of challenges. One is on the technology side, how fast that one can continue to upgrade and reinvent and get good quality technology manpower as well. That also continues to be a challenge, to have good quality technology team and being able to align them on lending side and continue to build those. Given that we also do not have we have limited budgets to invest and grow. We are broadly bootstrapped. We have raised only 700,000 from investors. So that is one part, how much one can continue to invest in technology so that we can continue to improve our solutions. Secondly, the business cycles also, sometimes push you to take a pause, because lending is very easy, but we are not actually in business of lending. We are in the business of collecting. We make money only when customers pay back. So if some customer industry segments are going through tough time, and if you can very easily lend and grow, but you really have to watch your portfolio growth. And if there are cycles happening, then you have to slow down that growth. And the last 1.5 years has been like that. So I would say the ability to continuously keep up with the technology changes and the portfolio side, looking at behavior of various portfolio are two challenges that such businesses or lending businesses have. And ours is infrastructure layer, so technology becomes an integral part of it. So that is a challenge, how much one can continue to invest. But thankfully for us, we've been profitable, and we've been able to invest in our to a reasonable extent, and our fintech partners have been more than happy, or have been very positive with us, and continue to refer us good partners because of the agility that they see in our tech stack.
What are the different pivots that you have made so far in this journey of building? Of course, you have mentioned about one pivot that you did from NBFC to technology model.
Yes.
What are the other pivots that you went through as a business?
Yeah, so let me clarify. We made that pivot from a traditional NBFC to a B2B2C NBFC. We continue to be NBFC, but we don't acquire directly now. We work on with enabling fintechs and in a B2B2C model. Mm-hmm. On the other side, we had to pivot between segments as well. In the sense, the fintechs, there are various categories of fintechs which work with us, and we have around 7 segments that we work in, which is healthcare finance, providing patient financing, mm-hmm. education loan financing, where we provide loans to parents who want to finance school fees or want to give courses like upgrad course or a Bajaj kind of similar courses for their children, financing those. Then there is revenue-based financing. Various merchants which have, e-commerce payments coming in based on their transaction data, we finance them based on their revenue, not based on last year profit. There is consumption loans, which is small ticket loans where people can, take a 5,000, 15,000 loan and so on. There is buy now, pay later loans. And there is expense management loans that we do. Now within these segments, there are certain segments that we had to take a call on, like consumption loans. There was an RBI guideline that consumption loans need to have certain guidelines, and they formed a working committee, in the month of January that that will give out those guidelines for the consumption loan and digital lending segment of small ticket lending. So we took a pause of saying that, we will not do this space. But that was a fast growing and a profitable phase segment for us. But we decided that we want to be completely on the right side of the regulation also, and be fully clear about what segments we want to grow. So we were waiting for those guidelines. So we stopped that on January, compromising a lot of profit, pool that it was generating. But we immediately, because we had education-based finance, we had expense management, and we had healthcare, we could pivot to that side and grow that faster. So those are kind of changes that we have to go through, in 2 years, moving from B2C to B2B2C, and then choosing between segments and deprioritizing some. Even now, we are making conscious calls of seeing that gig economy segment, we need to be at a slower pace, given that performance in terms of job losses could have an impact, and continue to grow on the other side, which is startup card financing and expense management, which is growing well. So these are decisions that I think we take every 6 months, so that to navigate our business in a profitable manner as well, and in a manner where we can continue to scale it, while keeping the portfolio quality in good control.
Okay. Now we will talk about decision making. Uh, I think you would agree, entrepreneurship is the art of decision making in another way. And as someone rightly said, that if you are an entrepreneur, then you have to take a lot of right decisions. And if you are a fintech entrepreneur or entrepreneur in finance, then at least 99% of times you have to be right. Having said that, how do you say that how do you make the decisions? What is the process of decision making that you follow?
Yeah, one is, if you are positive about future, if you are clear, conscious, and you are honest in your approach, a lot of decisions will start falling in place. But in our own company, let me go to the specific part. Because me and Pavitra are co-founders, so we of course discuss with each other on all critical decision making. We have certain areas that we focus on separately between two of us, but of course we're discussing critical items. And let me take an example. Last year, when pandemic happened, and you will remember in May, RBI had rolled out a moratorium policy, whereby, because customers were in difficult time and people were not able to go to offices, not getting salaries, businesses are not working, so they offered moratorium to troubled banks and NBFCs, that you need to offer moratorium to customers. So let's say if I have a 10,000 crore book, let's say 10 crore book on that as an example, and I say that, okay, I will have to offer moratorium to all my customers, that if they can't pay EMI for 3 months, that is fine. Mm-hmm. So we offered that moratorium to all our customers, to our entire portfolio. However, there are banks which have given loans to us, and we have to service their EMIs. So when our team checked with the banks, our lenders, they said, yeah, you are also eligible for moratorium. If you want, you can take moratorium. But then Pavitra and I discussed, and we decided that, okay, for the reputation of our business, and for us to have a strong track record in the market, while we would offer moratorium to our customers, but we will not take the moratorium from our lenders. And it was a tough decision, because there was a lot of uncertainty. That money that we had to pay to banks for as interest and EMI could have been handy to pay salaries more, or to continue to run our operations for more time, because we never knew when the moratorium is going to end, or rather when the lockdown is going to end in the month of May last year, let's say. Mm-hmm. So but we took those decisions. But the thing is, we consult and we decide that, okay, what is right for the business for long term, not just short term. If you are looking at long term goals, and if you have a collaborative approach where you reason out, there will be differences of opinion at times, but then if you are clear in terms of the end goal, I think both of us align on that, and it's been a great journey for us in the last 3 years, that we've been able to agree in a consultative approach and move forward. And in case of dilemma, of course, there are certain advisors that I think for every entrepreneur there should be some outside sounding board advisors. They can also help you in decision making, where the options are multiple, and any path is not a wrong path. There are 2-3 right paths to be taken. But of course, your advisors can surely help you there as well.
Okay. Speaking of the wrong paths, you would agree that although most of our decisions are right, but some decisions end up being a failure. So
Yes,
tell us some about some of the failures that you have gone through as an entrepreneur.
Yeah. So again, first I'll say, when we were trying to scale up B2C in a business loan or even a professional loan format, we were not able to scale that up. Given our cost of funds was not in line, and the performance of the portfolio, we didn't see it performing too well given the kind of channels we had. So that was the 2 years back. But let me talk more recent examples. That last year, when we were doing fintech loans also in this model, we were within the same segment, we could see different performance. For example, we started lending in education space, and we lent to schools as well. So on one side, we were lending to parents who are trying to finance fees for their children. On the other side, we were financing to the school trust, to the school itself.
Mhm.
Now that portfolio, while it was scaling up initially fast, but we saw very average and below average performance, especially in tier 2, tier 3 towns. It was the schools who started, defaulting on payment first. The parent was still paying and they continued to pay well. So that was segment which was growing, but we failed to scale that segment up. It performed badly, and we could pull back in reasonable time. And we had FLDG protection in terms of deposit. But initially last year, we were very bullish on school finance segment, financing to schools, but unfortunately, it didn't pay us well, and we kind of failed to scale it. But we rebooted from that. We continued to grow parent finance. We went into agri-tech financing, agriculture financing, and other segments which have done well for us. So there are failures in segment, and of course there are sometimes, in terms of our delivery timeline on delivering a particular service, we do extend it at times. At least in last year it did happen because people are also not able to come here because of pandemic and other reasons. So those things do happen, but I think we've been able to overcome that with now more robust management team and a well laid out org structure in the company. But of course, there have been hiccups in the last 2 years.
Okay.
But as long as one learns from that and puts other measures in place, I think these help you move forward in a bigger, faster way as well.
Okay. We'll talk about the learnings. Before that, can you tell us what is the meaning of entrepreneurship for you? How would you define entrepreneurship?
I think entrepreneurship is a journey of self-discovery as well, because your company starts representing the founders' values and ethics over a period of time. Because the founders make various decisions in the life of the company, which segment to pursue, what kind of values to pursue, what kind of dealings or transparency you have in terms of your interaction with partners, how do you reward your employees, how do you recognize or motivate your team. So that's the founders values and ethics start building the company. So entrepreneurship for me is a journey of self-discovery and leaving an impact, and building a legacy with what thought process you have, what mindset or what creativity you have, and what strengths and weaknesses you would have. So it's about creating something of your own. It's a great opportunity for people to come out of any world, whether a corporate world or they need to try their hand of what they think is important for their immediate society or their neighborhood or their country or whatever. But it's about expressing yourself and giving a manifestation of yourself out in the market, and of course creating something new which has a lasting impact and a legacy. Whether that happens or not happens is for future, but the intent is to represent yourself out there and create something very new.
Okay.
Which people in society can value, can and benefit from.
Coming to the final part, the last question, tell us about the learnings that you have got as an entrepreneur, which can be taken away by our listeners and can be applied in their ventures as well, and so that they don't have to go through that same learning phase again that you have gone through.
Sure. 2-3 learnings. First, I'll start with the timing of entrepreneurship itself. I think I could have been 5-7 years earlier as well as an entrepreneur. And why I want to elaborate on that, is that there are so many people in corporate world who are doing extremely well and who do achieve great heights in their career. But I think as a country, we had less of entrepreneurship culture earlier, but now it has changed. And it's a matter of personal comfort, but I would tell people that, okay, entrepreneurship is also not that different. It will have high rate of failure as well, and there is no guarantee for success, whether in a career or in entrepreneurship. But I think people who have have a reasonable corporate career as well, or have a reasonable confidence of going out in the market and trying their hand, they should take a punt on this at some stage in their life. Earlier the better, but one should go for that. That is one learning. Secondly, when I came into entrepreneurship, you would expect certain things to be there in the company or your idea when you try to implement it, and you would think of a path, but things will turn out to be radically different. That one can be rest assured of. There are a lot of times that the reality will be much more different. I thought we will improve our cost of funds and we will easily do business loans or doctor loans at with a good margin, but I was wrong. Things don't happen that way. Because you need to have certain size, scale, rating, whatever else to achieve certain things. And various other times also things have changed in the market. So be ready to accept that change and to repivot. Don't get egoistic, stuck on one idea. Ki, "Mere ko to ye aata tha, so I will do this only and I will prove it to the world." There is no point in doing that. You have to look at your strengths, circumstances, and then be ready to repivot rather than becoming just possessive about something that I want to do only this because I just came for this. So you have to repivot in reality of the market and the customer segment that you look at. Thirdly, I would say that when you are working with a team, and especially when you work with entrepreneur, always face this question whether there should be a single entrepreneur or multiple founders. And I've read about this also. In my view, it is generally 2 to 3 founders, which is the ideal thing. Not maybe one or not maybe 4 or 5. I think 4 or 5 is too many. One is less. Because there are a lot of times that you want to support each other. There are a lot of times that you are lonely as an entrepreneur. There are a lot of times that there are challenges. There are times in our journey when we were only 45 days away from running out of funds. And we didn't know, 1 to 2 years back, that whether we will have something. But another learning that I've had is that if you continue to knock on doors and you continue to work in an honest and confident manner with the right approach, you knock 3 doors, at least 1 door will open. So as an entrepreneur, you have to be persistent and continue to, keep trying new things. And me and Pavitra, I look at him also in some ways. We learn from each other. So, I've seen that, if you continue to push things and you continue to, try new things, 1 out of 3 would work out for you, but you have to be persistent enough. So broadly, I would say those are the learning that I've had in terms of my journey. And we'll see how it progresses. But definitely, I have not regretted it ever that I've moved into from a long corporate career, moved into a entrepreneurial side.
Well, it was a very nice conversation, and I got to learn a lot about fintech and different aspects of entrepreneurship. Thanks for your time, Naresh, and I'd say my best wishes for Kudos Finance.
Thank you very much, Priya. Wish you the very best in your initiative as well. And it was a pleasure interacting with you over the last 35, 40 minutes.